So it's very important that we always have to accumulate and start it. Many people will start things when they have no idea of what they are doing. Even though, yes, we may not have all the knowledge before we start, but at least you need to get to know the ins and outs of the thing before you move on. Right, so I welcome you all once again. This is here with me, Mr. Collins, you're welcome. And my sister too. Today, my sister joined. Dr. Sandra, she's here. She's also trained in Forex, and I believe that one of these days you will also see her teaching the class. And I can see Mame Okuya, Mame Kunadu, who is also reading seriously, Baju, and then I think Bonsu too. I think I've recognized you. And the last time, Imono Rasnana, you joined, but I think you were late. But today you're very fast. Welcome, bro. And then I think a queer, yeah. You're also welcome. You're all welcome. Today, Asenso is not around, so he couldn't join us. Right. As usual, for me, I want you to understand that wealth creation is nothing different from what we know in the Bible. The Bible gives us a lot of idea about wealth creation. Please, sir, the network was off, so I'm sorry. Let me share it again the screen, please. Okay. Hello. It's my advisor, please. Mr. Collins. It's my voice going on, please. Okay. Let's move on. So, the last time we met, we read Deuteronomy chapter 8, verse 18. And the Bible said that it is God who gives us the power to create wealth. So it means God has put into our hands, or He has given us the power to create wealth. In fact, this week I was thinking and meditating on this particular verse, and I think what I got from the passage is that creating wealth is like the gravitational force. Whether you're a Christian or you're not a Christian, whether you're a believer or you're not a believer, you enjoy the gravitational force. If you pull your leg up, you'll come down. If you jump up, you get down. So it's a natural law. So the same way is when you study the Bible deeply, you realize that wealth creation is a natural principle. The Bible has put in it certain attitudes that we need to practice to create wealth. And as time goes on, I will discuss some of these attitudes with you. You see, some Christians do not know some of these things. And it is sad to tell you that those who are fixated on creating wealth somehow also think that if you want to be wealthy, it's not being biblical, you know. But the fact of the matter is, you can be wealthy and become a serious Christian because when you study the Bible, just as we breathe, just as we walk freely, just as we receive rain, just as we receive sunlight from God, yes, God has also put into the natural laws of life creation of wealth. So if you obey its principles, you will become wealthy. But the sad part of the thing is, many believers, you see, there are some kind of passages in the Bible, and the way it is often read and interpreted, people often take it as if that money is bad. Creating wealth is something attached to doing some kind of wrong thing before you can become wealthy. That's not the fact. So Deuteronomy 18 said that it is he that giveth thee power to get wealth. When you go to Proverbs chapter 10, verse 22, the Bible, the blessing of the Lord, it maketh rich, and he added no sorrow with it. You know, God desires to enrich us abundantly. In fact, take your time and go through the Bible and study the life of Abraham. You realize the Bible said that Abraham was very rich in livestock, in silver, and in gold. Genesis 13, verse 2. And so there is no doubt that the greatest people, the greatest characters of the Bible, most of them were wealthy people. If they were to live today, they may be one of the Elon Musk, Warren Buffett, Bill Gates, and something like that. Even if you study the life of Solomon, the Bible tells us that the wealth that God gave him, if it is estimated in today's currency, it will be more than $2 trillion. So it means that nobody is even up to the mark of the wealth of what do you call it, Solomon. And so, can you tell me that God is not interested in us creating wealth? No, He is interested. So that is why He's given us these two passages in Deuteronomy and Proverbs, that it is His blessings that makes wealth, and He has also given us that power to create wealth. And so, one of the blessings that we receive from God, it is not always like, God, give me this. But one of the blessings that we receive from God is the ability to create wealth. So we are saying that wealth is not just given, but that God gives us the power, that is the wisdom and the opportunities to create this. And so some of the opportunities is what we have now, that we have created this class for you to learn something, a skill that you can leverage to build wealth. And so one of the things that you need to understand is that wealth creation is about understanding and applying principles of financial success. And you can find a lot of them from the Bible and also from reading books of other wealthy people. And so what I'm trying to say is that we have the power to create wealth. And so let not the poor people always think that, oh, we are not privileged to create wealth as some people. And let not the poor people also think that those who are rich are all doing some nasty things before they will create wealth. No, some are doing real things because they are obeying the principles of wealth. It's like health. If you obey the principles of health, you live healthy. And so the same way, if you obey the principles of wealth creation, you become a wealthy person. You understand? Yes. That is what the Bible is trying to teach us. Now, it's also said that God creating wealth has nothing to do with religious background or denominational affiliation. So it is not a matter of the kind of church that you go that you become wealthy. It is not a matter of the country in which you live or your religious background, whatever. It is the mindset, because God has given us that power, and that is that we leverage on that ability that He has given us to build wealth. And so I'm saying that many believers remain poor while non-believers thrive financially because wealth is governed by universal financial laws. And Ecclesiastes chapter 9 verse 11 says that the race is not to the swift, nor the battle to the strong, but time and chance happen to them all. You see, we all have the same time. We all have the same opportunities. But the point is, have you trained your mind? Have you trained your eye? Have you trained yourself to this extent that you can actually identify opportunities? You can actually identify certain things that you can leverage to build wealth. So, and it's all about understanding economic principles, investing wisely, managing money properly, and the real factors that determine wealth is not church membership. No. So it's not a matter of also saying that no. So me that I'll be worthy. No. Going to church is something different, and building wealth is something different. But you can put the two together and become wealthy believers. So that is what the Bible is trying to teach us today. And we are saying that wealth creation is a natural law that works both for believers and unbelievers. And so the reason some unbelievers are rich is not because God favors them, but because they have applied the financial principles that work. And wealth gained outside of God can bring sorrow. That is what Proverbs 10:22 is saying. And so, if you do not follow the principles that God has outlined to create wealth, and you rather go on to going for blood money and something like that, scamming and something like that, you see, at the end of the day, you're not going to enjoy to the fullest. And so today, this is a quick reflection on the Bible, and I want you to take away point one: God wants us to prosper. Let's have that mindset. Let none of us think that it's like God wants us to be poor, because when you look into the Bible, there are some passages, blessed are the poor in spirit. No. God wants us to prosper. He gives us the ability, but not free money. I am reading a particular book, and this morning the book was saying something very fascinating. And then the book says, like, a man was drowning in water. Some people saw him, and then they took a boat to go and rescue him. But when they asked the man to jump, to touch or hold the boat, and then so that they can actually pull him inside, he said, no, God will rescue me. Another boat came and he said the same thing. And the book created a scenario like the man died, he was drowned, and later when he came in contact with God, and he was blaming God. God, why is it that when I was drowning in water, I didn't save me? And God said that I brought you two boats, but he didn't accept them. You understand it? You see, many of us, a lot of opportunities come on our way, but we don't grab them. And so, what we want God to do for you, He will not give you any free money. He will give you the ability. You have to think, you have to reason, and leverage on that to build financial. So, apply financial wisdom is the key to wealth. And so, if you are a young person like myself, it should be your sole priority that from today onwards, you will always study and study and study, and always position your mind in such a way that you want to create wealth. Recently, I was doing some kind of analysis, and I realized that, you see, how many people become wealthy by inheriting or through inheritance? A few. And to those who also inherit wealth, most of them, they end up messing it because they do not have the mindset of the person who created that wealth. You see, that is why those who create wealth by learning, they always achieve success. And so today, this is what I want to encourage you with from the Word of God. And without wasting my time on here, we will move on to what we have for today. Today, I like your, let me say, your attendance is very encouraging. I believe that from today you are going to do well. And I believe that most of you are reading the page that I believe, I believe you are reading. So I will encourage you to keep reading. Today is lecture two. And for lecture two, we are still at mechanical stage. I keep emphasizing the fact that Forex trading takes 3 stages. And I believe you know. The first stage is the mechanical stage. That is the learning stage. The second stage is the subjective stage. That is the applying stage. And the third stage is the intuitive stage. That is where you play with the market easily. You see, if you skip any of the stages, I'm telling you, trading will become a mess for you. It becomes something difficult. So the first stage, you take about 8 to 10, 1 year to learn. That is the mechanical stage. So here, at this stage, we are just learning and learning, and we just want to know everything about forex trading, everything about trading. And the most interesting thing is that if you learn all there is to know about trading, same knowledge in forex trading, you use the same knowledge if you want to go into stocks. You use the same knowledge if you want to go into crypto. You use the same knowledge if you want to trade commodities. You use the same knowledge if you want to trade indices. You use the same knowledge if you want to trade boom and crash, step index, volatility index, and all that. There are a lot of assets you can trade. And you see, it all takes learning. You understand? Yes. And so learning is the first stage of forex trading. Many people skip the learning phase and they begin attending some 3 months courses, and then they will take maybe they will go through some few technical analysis. I can do it for you, and then 3 months time you go to the chart and but I'm telling you, you never make it. You lose a lot of money. That is why it is quite important for you that you focus more first on learning to understand this business you want to do. Trading is not gambling, so do not think that you are just coming to take one or few things and then you go and hop onto the market and do whatever you want. You will not make anything. But with wealth of knowledge available, you can leverage on the knowledge to make a lot of money. So let's go into today's lesson. So today's lesson is actually the continuation of what we had last week. Every Sunday we meet. So those of you who just joined today, make it a point to be here with us, God willing, next week, provided there's no light out. Okay, and I will try my best. Even if there's a light out, I'll try my best to use my power bank to power my phone so that we can use it. So today, by the end of today's lesson, we are going to look at what is a spread in forex trading. We also look at the bid and ask price. We will also look at some forex lingo, like some jargons we use in forex trading. We will also talk about types of forex orders, and we will also talk about types of other trading order types, and so we'll look at them. And then we also look at demo trading. And then the most important part of forex trading, everybody wants to make riches. Okay, we want to make money. So we will look at the question about it, which is, can you get rich by trading forex? We are not yet there, but at least the answer is very obvious. And then the second part, we are going to look at when can you trade forex? You see, it's not every day that we trade. It's not every time that we trade. For those who joined earlier, we said that forex trading takes 5 days a week. So we trade from Monday to Friday. So that's the first market. But crypto market is 24/7. For the crypto market, we trade 24/7. But for forex market, we trade only Monday, Friday. So Monday to Friday we are done, and weekends we don't trade. We use the weekend for other things. Okay. So currently, as we speak, the market is closed. The market will open in the Asian time. That is probably today, 9 p.m. And the last part we will also look at when you can trade. When can you trade forex? Like the Tokyo session. So because we're going to discuss first trading sessions, we'll start talking about the sessions. And today we will look at the first session, that's the Tokyo session. So these are going to be our learning objectives for today. So let's begin with a spread. What is a spread in forex trading? In our previous lecture, we discussed spread. And we said spread is simple, and it's all about the difference between the ask and the bid price. The difference between the ask and the bid price. And so we are saying that when we talk of a spread is all about the amount that your let me say your broker or your service provider will charge you for opening a trading session for you. I mean, you cannot just trade. So a broker will give you a platform to trade, and the broker will have to charge service fee, and that is what we call the spread. It's like you going to transact money at the bank, so the bank will charge a fee. And so that fee is what we call a spread in forex. And how do you get to know the spread? To get to know the spread, we use two different prices. And the first one is we call the bid price, and the second one is called the ask price. And these two prices are different from the actual price of the currency pair you are going to trade. So let's say we could go to the market, and for example, the pair we have here is the euro dollar. The Aussie dollar, which is the Australian dollar paired with the United States dollar. When we go to the market, you can see that your broker or your service provider will give you these two prices: the bid price, which is 0.9189, and the pipette is 9. And then he also provides you with the ask price, which is the 0.9192, the pipette is 6. And he's saying that if you want to take a trade, we have explained earlier in previous lessons that in trading, currencies are quoted in pairs. And we trade by checking which currency is performing better than the other. As we move on, you get to know how to know which currency is performing better based on certain factors. We'll talk about that. So if you think, for example, this particular example is the Australian dollar and the United States dollar. If you think this pair, the Australian dollar is going to do better than the US dollar. And for this case, the Australian dollar is the base currency. We have discussed that earlier. Then we are going to place a buy trade. And here, your forex broker is going to tell you that if you think the Australian dollar is going to be stronger than the US dollar, and so you are going to buy, then this is the price I will let you take your trade on. And then you're going to take a trade with 0.9192.6. Now listen, the price is not fixed. You see, when you go to the live markets, you have different prices every single day. Okay, this is for learning sake. The same way, if you think the US dollar is now the quote currency in this particular pair, and for that matter, if you think from better than the Aussie, then you are going to sell the market. And then your broker is also going to tell you that, okay, if you are going to sell the market, no problem. But this is the price I will give it to you. So that is it. So when we talk of the bid and the ask, we are saying that the bid is the price at which you can sell the base currency. And so look here, on the Aussie dollar, the base currency would be charged at 0.9189 0.9, and that is the amount you can sell the trade. The same way, the ask price, which is we are saying that is the price at which you can buy the base currency. So if you think the base price is going to do better, then you are going to buy the Australian dollar at 0.9192.6. So that is how your broker going to give the prices. So these two prices, but with these two prices, the broker is going to make profit for. All right, let's move on. So what we are saying is that with this, hello, is my voice clear, please? Is my voice clear with you? Please, can I hear you, please? Okay, I think the network is back now, so we can move on. All right, so that is it. So that is that for the bid and ask price. Let's move on. So we are saying that the spread is how no commission. It's how no commission brokers make their money. So they charge you some transaction and some fee, and that is what we call the transaction cost. Let me highlight that for you. Okay, the transaction cost. So your broker charge you for providing you services because you are trading based on the price they have provided for the platform have created and all that. And so you see they have to make some money, to take care of some expenses and other things. And so we call it the bid ask spread. And that is also termed as the transaction cost. And so anytime you're going to trade, at least you need to check the spread. Sometimes the spread is too huge, sometimes very tight, and so it is up to you to check. Okay, the spread is too huge, yet I'll buy it anyway. And it will depend on the kind of trader you are, whether you trade even when the spread is high or low. Okay, we will get to that later. So we are saying that instead of you charging a fee for making a trade, the cost is built into a buy and sell price, the currency pair you want to trade. So that is that for the spread. Today I must finish, so I wouldn't spend my time on the spread. I think it's quite clear with you. When you talk of the spread, I think now you know. So when you take the difference between the bid and the ask price, you get to know your spread. So for example, let's look at an example here. On this particular chart, we have the euro dollar. So let's say you are going to take a trade and your favorite pair is the euro dollar. Particularly for me, my favorite pair is GBP USD. I trade pound dollar. So that is my favorite pair. Now, when you go to the platform to trade, we have the base currency as the euro, the quote currency as the US dollar. And so the base currency is the bid price and the quote currency is going for the ask price. So when you are going to take the trade, you are going to see these two different prices. Now, I am saying that it is different from the actual price of the pair on the platform. Okay, let me see if I can show you what I'm trying. The bid and the ask price are actually different from the actual price of that. So let me check the live market for you to see. A minute, please. Let me share another page with you for you to know what I'm talking about. So when we are talking of the bid and the ask price, you see, this is my favorite pair. You see, the pound dollar is here. So this is the ask price. The bid price and the ask price. And you see, in between the two is what we call the spread. So this is trading view. You see, that is where traders we do our analysis. So when you do analysis and you see, for example, for me, I think that for next few weeks ahead, the US dollar is going to be stronger than the British pound. And so I am actually, per my analysis, I am for price to hit a certain place and then I will take a sell trade, meaning that I want the US dollar to perform better than I expect the US dollar to perform better than the British pound. And for that matter, you see my analysis over there. Right. But you see the spread over there, you see where my, let me do it like this. You see where my cursor is. Oh, right. You can see the spread is 8.0. Later we will do the calculation to get to know the transaction cost. And so if I want to sell the market, this is the price that the broker will permit me to take the trade, which is 1. So 1.29367 is what the broker is going to permit me to take the trade on based on my analysis. But you see, when you come here, if you can see the black price and the price in the black background here, it is the actual price of pound dollar. So the base price, the base currency is 1.29407. It means that if I want to buy 1 GBP with $1, I will have to pay 1.29407 to get with $1 to get £1. But when I go to the market and I want to buy it, let's say I want to buy, the forex broker is going to give me a different price from the actual price of the currency pair. And the price he's going to give me, which we call the ask price, is 1.29447. But if I want to sell, he's going to give me 1.29367. And he's now going to make a transaction cost. That is a profit from the trade that I'm going to take. That is 8 points. And that is the spread. And so based on the volume that I'm going to buy, he's going to make profit on that. I think recently, last week, we discussed lot size. And so we are going to discuss that one to see the transaction cost that I will pay. Should I take this trade? So let's get back to what we're discussing. So this is how it is done on the market. So for euro dollar, this is the same thing that will happen. So we have 1.1051 for the big price and 1.1053 for the ask price. And if you check the difference, you get 2 pips. Here is going to be the spread. And we are going to use these 2 pips to calculate the transaction cost that the broker is going to charge from you. I believe it's clear. Right. So when we say that, for currency pairs with US dollar and other pairs that set the yen currency, they are all quoted in 4 decimal places. For yen, it is only quoted in 2 decimal places. And so you get to know. So let's say you have US dollar and then the Japanese yen as a currency pair. This one, when you check the spread, you can see that the price is 110.00 for the bid price, for the bid price, yes. And then the ask price is 110.04. So when you take the difference, you get a spread of 4 pips or 4 points. And give the 4 points to calculate the transaction cost that the broker is going to charge from you. Now, when we talk about spread, brokers have 2 different spreads. We have the fixed and we have the variable spread. So let's talk about the fixed spread. Yeah, when we talk about the fixed one, it means it is constant. The spread is constant throughout the trading journey. And then when you talk about the variable one, you see it changes. Looking at the chart over there, sometimes it is tight, sometimes you see it's quite wide, and it tightens, it widens, it tightens in that order. But for the fixed spread, you realize that it's the same throughout. So when we talk of the fixed spread, we are saying that it stays the same regardless of what market condition at any given time. So that is the fixed spread. So it remains constant, it doesn't change. A fixed spread has smaller capital requirements. So when you're going to trade and the transaction cost is fixed, means with a small capital requirement you can take a trade. And for that matter, we are saying that it is cheaper alternative for traders who don't have a lot of money to start trading. So if you are a beginner and let's say you have just $100 to trade, you may not have to. You may go for the fixed spread. Okay. And then one of the disadvantages is that we have 2 disadvantages, at least serious ones. We have what we call a recoat. Because their spread is fixed. Sometimes you go to the market and you see the price that you are interested to trade, but the forex broker will actually give you a different price to open your trade, and that's what we call the recoat. So we say there will be a time when the forex market is volatile and prices are rapidly changing. Since spread are going to be able to widen the spread to adjust for current market conditions. So if you try to enter a trade at a specific price, the broker will block the trade and ask you to accept a new price. And that means you will be recruited. And when we talk of the slippage, the same thing. On the market, we have what we call slippage. Let me check if I can get some example for you to check. All right. Let me go back to, let's say, the 4-hour time frame. You can see here. Oh, sorry. Let me share this screen with you. So for slippage, this is a clear example of slippage. Look here. You can see where my cursor is. You see, on that week, the price closed at this level, but the following week it opened at a different, a serious gap in between the previous week and then the current week. And for that matter, this is how some forex brokers will make money. Okay, and they will always cause a slippage because of fixed price or fixed spread. Sorry. So that is it. So when we talk of slippage, that's what we mean by slippage. Let's move on to talk about variable spread. As you can see, the word itself explains the point. It means sometimes the spread will widen, sometimes it will tighten, and it is also based on some economic terms, supply and demand. It depends on, you see, in our previous study, we talked about liquidity, and we said liquidity is about the volume of activity on a particular day or time. So let's say, let's take, for example, euro dollar. When a lot of people are taking trade on euro dollar pair, there's probably going to be a tight spread because there's going to be a higher demand, okay, of that particular pair. And so there's going to be a tight spread. But when you see that people are not buying it, you see, when people are not buying it, the spread is quite wide. It means that there's a low trading activity on that pair. So look at the chart over here. You can see that on the normal spread, you see the selling price or the bid price was 1.2458. But when you go to the ask price, it was 1.2460. And so the spread is very tight. And that is just 2 points. And so it means you're going to pay a little transaction, but because a lot of activities or trading activities going on that particular pair, a lot of people are taking trades on that. So there's a serious buying and selling activity on that pair. And so you see the broker would have to tighten the spread, okay? Because there's a lot of trading volume on it, he's going to make a lot of money from a lot of traders. But when a lot of people are not trading, he has to widen the spread so that the few traders who trade on that pair, he makes his money. You understand? And so the demand is actually low. He's not going to. He's going to quote some different price that is going to still make some money. And you can see that this one with the widespread, you see, at this particular time, the spread is about 20 points. You see. So if you're a trader, do not skip the idea of spread. And this is something that can actually widen. So you're saying that spread may also widen. For example, the man Trump, when it comes to the trading market, either in crypto, in stocks, in forex, or whatever he says related to the currency, the US dollar. Last meeting, we said that the dollar is king in the trading market. Everybody, even countries and businesses, all reserve money in terms of dollar. And almost in the entire world, trading takes place through the US dollar. And so the dollar becomes the king of currencies. Okay. And so when the president of the United States talks about the the currency. You realize that there's going to be a massive impact on the currency, and it affects. So that is it. And so that was then, but now it's still true. You see, when Trump was sworn into power recently, there was a serious move in the market, and those who were into crypto made a lot of money. Okay, so that is it. Now let's look at some of the advantages of variable spread. You're saying that so the advantages we we have advantages of variable spread. Number one, variable spreads eliminate. So it eliminates experiencing recruits. And so for that matter, you realize that it is not familiar with variable spreads. So recruits is not familiar with fixed spread. And again, we are saying that spreads, trading efforts with variable spread also provide more transparent pricing. Often variable spreads are given by when the broker is actually recruiting price from different service providers. Okay, that is it. And so, but some of the disadvantages of variable spread is one, a variable spreads aren't ideal for scalpers. We're going to talk about scalpers. So there are some traders, they take trades in some few minutes and then they are in, they are out 5 minutes, then they are off. The maximum they can go maybe some 15 minutes and they are off the market. And so when the market, the spread is variable, sometimes wide, sometimes tight, you see that they pay a lot of transaction costs. So it's not good for scalpers. A widening spread can quickly quickly eat into any profit that a scalper makes. And variable spreads are also just as bad for news traders. Those who trade news, you understand? We are going to talk about news trading later on. So those who trade news, you see, sometimes you see news, they have high impact. Let's say uh, gross domestic product, the GDP. We're going to learn a lot. A lot of economic factors affect the forex market, how the price move. So we have the non-farm payroll, the GDP, the employment rate, and all that. There's consumer price index, the producer price index, the retail sales and all that. And so these high impact news affect price movement, especially, and for that matter, it widens the spread. And so you see, if you are a news trader, it means you are going to pay a huge transaction cost. A huge transaction cost. And then when we talk of fixed and variable spreads, the question is which one is better? And what we are saying is that if you do not trade frequently or you trade less, then probably fixed spread could be good for you. And traders with larger accounts who trade frequently during peak market hours when spreads are tightest will benefit from variable spread. Okay, if you trade frequently, so it means you need a variable spread, especially when the spread is tight, you pay a small transaction cost. And so we are saying that traders who want fast trade execution and need to avoid recruit would want to trade with variable spread. We move on and get to know your trading style, whether you're going to be a scalper, a swing trader, a position trader, a day trader. It depends on the spread type of account or broker you're going to work with. Okay, let's quickly look at some calculations on spread. Like I said earlier, if spread is all about transaction cost, okay, the amount you're going to pay to the broker for providing you services. And so let's take, for example, the euro dollar here. We have the bid price as 1.3562.6. And then the ask price is 1.3562.6, point 6, 64.0. Sorry. And so when you find the difference, you're going to get 1.4. You're going to get 1.4 spread. Yeah. And so having 1.4 spread, what do? I'm going to use the word calculate the spread. Okay, a minute, please. Sorry, please. A minute. So let's say your spread is 1.4. Then how much are you going to pay? So recently, in our previous meeting, we discussed the lot size. You see, we said that we trade it with lot sizes. So we have the standard lot, the mini lot, the micro lot, the nano lot, and lots like that. And so we said the standard lot, you are going to buy 100,000 units of the account. So 100,000 units will give you $10. But when you are trading with a mini lot is 10,000 units of the pair that you're trading. And 10,000 units is equal to $1. And so let's say you are trading, you take a trade with a mini lot, then, and the spread is 1.4, then it means 1.4 times $1 will give you $1.4. So this your transaction cost or your spread cost is 1.4. But let's say you took 5 mini lot trades. So your trade has 5 mini lots. It means that if one mini lot is $1, 5 mini lots will give you $5, and so you multiply $5 by the spread, which is 1.4, and that gives you $7 spread cost or transaction cost. So that is it. All right, that is it for spread. And so we are going to move on to the next topic. We want to look more into bid and ask price. Let me retrieve that, please. Okay, so the bid and ask price, we want to go into some details. Okay, so we have already talked about a bid price, but here we are saying that in trading world, the vendor price is ask and your counter offer is the bid. So when we talk of the bid and the ask price, we are saying that forex code consists of two sides, the bid and the ask. So we have said that already, so I wouldn't waste time on this. So any pair that you are going to trade, you are going to have two different prices, the bid price and the ask price. And remember, we are going to use the bid and the ask price to work on to get a spread, and we are going to use the spread to get the transaction cost that you're going to pay. So we are saying that when you are buying, you will pay what the broker is asking. When you are selling, you need to accept what the broker is bidding. So that's why we say for big price you take a sell trade, for ask price you take a buy trade. So it's as simple as that. Right. So when we say let's take for example this one, we have the euro dollar pair. Okay. So for the euro dollar pair, the bid price is 1.1025.2, and then the ask price is 1.1026.4, and the spread is going to be 1.2. So we are going to use this spread to actually calculate your transaction cost. So depending on the lot size you are going to trade. So if you are going to take a trade with a standard lot, which is actually $10 per pip, or let's say $10 for standard lot. Okay, then it means you're going to multiply $10 per 1.2, and you know the amount you're going to pay. So let's say $10 point 1.2 will give you around $12. So you're going to pay $12 to the broker for providing you services. Okay, so that's it. Now we have talked so much about spread, but at least a quick recap. You said spread is what about the difference between the bid and the ask price. So when you ask you a spread, at least you should be able to tell us a spread what a spread is. It's all about the difference between the bid and the ask price, right? And remember, I've said it earlier. The spread is all about transaction cost, and this transaction cost that we call the spread is how the broker makes money. How the broker makes money. So those of you who have ever been to the Forex Bureau, see when you go there, they have different prices. So if you are going there with a dollar, they have the price they buy a dollar. If you have the cost for them to make the profit. So basically, Forex Bureau also operates on this same principle, right? Now let's look at some. Let's keep this one. In fact, we are actually talking about the fact that this is actually like buying and selling your iPhone or something like that. So when you go to the Forex market, you see they will give you all the currency pairs that we have talked about, whether it's a major currency, it's a minor currency, it's a cross currency, or whatever currency you're going to trade. Whether you are going to trade the stocks, whether you're going to trade with, let's say, um, indices, commodity, or crypto, they are all going to give you bid and ask price because somebody is going to render the service to you, and you have to, and that person has to make money. Okay, so it's just not you who is going to make money, not only you. Somebody else is also going to make money for providing you services, for designing the platform for you to trade, and so you pay transaction cost. So that is why your spread should be very interesting to you if you want to be a very successful trader. And so when you are choosing a forex broker to work with, you think on the spread that your forex broker is going to deal with, whether it's a broker dealing with variable or fixed spread. So this is an example of a spread. We have talked about that earlier. So we have the bid price here, the ask price. I think I explained this. And so let's move on. And they are saying that when you place a trade with a retail forex broker, you are called price taker. Okay, so that's how you accept their price. So you are a price taker. All right. So that is that for bid and ask price. Let's quickly move on to some forex lingo. When we talk of forex lingo, we are talking of some jargons. Forex trading is very interesting. So those of you here, very soon you'll be speaking the language of forex traders. Okay. So when we are talking of major currencies, minor currencies, exotic place, and something like that, at least you should have an idea. So let's look at some of them. So forex lingo, we are talking of jargons that we use in forex trading, right? And so we are saying that as in any news that you learn, you need to learn the lingo, especially if you wish to win your last hand. So the newbie, you must know certain terms like back of your hand before making your first trade. So some of these terms is what we are going to look at. Now, we have already talked about major and minor currencies. The major currencies in the world, we said that there are seven. We have 8 major currencies in the world. Okay, we have the US dollar, the euros, the Japanese yen, the British pound, the Swiss francs, the Canadian dollar, the New Zealand dollar, and then the Australian dollar. These are the major currencies in the world. Why? Because these are the most liquid currencies in the world. When we talk of liquidity in forex trading, we are not talking about the fact that it flows like water. No, it is because they are the most traded currencies in the world. When we talk of liquid, we are not talking of liquid in terms of science, okay? So you should understand. Now, when we talk of minor currencies, we are talking of currencies or from smaller or emerging market economies. So, some countries, they are also developing, and so their currencies are called minor currencies. Um, so, for example, uh, what do I say? Let's move on. Let's move on. So we are saying that these currencies are still traded in significant volume, but are less liquid. You see, they are not often traded. So as the major currency. So even though yes, you can still trade them, but you see, they are not liquid as the major currencies. So they often come from countries with developing economies or smaller financial markets. Now we can trade the Singapore dollars, I think. So yes, and then we have some other countries that we can trade. I think South Africa, their currencies, I think we can also trade that. And we also have the exotic currencies. And we are saying that they are also from smaller, less developed or emerging market economies. And they are also less liquid and more volatile compared to major and minor currencies. Okay. Don't forget, under minor currencies, we talk about the G10 currencies and some currencies like that, the BRICS and all that. So I think you can go and read much on minor currencies. We have also talked about base currency. So anytime you have a currency pair, like here we have the Swiss francs, okay, the francs, okay, the US dollar and the Swiss francs. It's a currency pair, and in this case, the first currency that has been quoted here is the US dollar, so it's the base currency, right? And that's very simple. Um, when we talk of the quote currency, just like we had the US dollar and the Swiss francs being the second quoted currency in this particular pair, then the Swiss franc becomes the quote currency. That's the quote currency. So we are saying that the quote currency is the second currency in any currency pair, and the base currency is the first currency in the currency pair. So whenever you have a currency pair, the first currency is this, and the second one is the quote currency. Uh, right. Then we also talk about a pip, or some people also say points. So when we say a pip, we are saying that it is the smallest unit of price for any currency. Now, when we take the euro dollar, we are saying that if you want to buy the base currency with the quote currency, you need $1.2538 to buy 1 euro. Now, we have already said that when we go to the forex market, the broker is going to give us two different prices. And so when we are talking of a pip, we are going to develop that from the price, okay? And so the price that we get, so for example, the price here, 1.2538, when it moves from 1.2538 to 1.2539, then we can say there's one pip move. Yes. And the pips are going to actually calculate your profit for you. So if you take a trade and the pips is in your favor, then you make profit. If it's against you, you lose money. And I also have the pipettes. The pipette, we said most currencies have 4 decimal places, especially taking the yen currency out. All the other currencies are into 4 pairs. Okay, sorry, 4 decimal places. But sometimes they add another value. So, for example, the euro dollar, the exchange rate itself is 1.2345. But sometimes we are saying they may quote it as 1.23456, and the 6 here is what we call the pipette. Yeah. So that is it. And we have standard pip. That is when the value is in 4 decimal places. So when 5 moves to 6, so we have 1.2345. When it moves to 1.2346, then we are saying that it has moved 1 pip. That is standard. But for the pipette, if euro dollar moves from, let's say, 1.2345, and the last digit here is 6, that is the pipette value. And if it moves to 1.323457, you see the change is not in the standard pip, but rather it is in the pipette. And so we say we are going to say that it has moved one pipette, and one pipette is actually 1 out of 10. So you see, it's a fraction of. And we have also talked about the bid price and the ask price. So I wouldn't want to spend that time. And we have also talked about the bid ask spread. So that one too is very clear. All right. Okay. So that is that. And the transaction cost is all about the bid, the spread. So we have also talked about that. So when we take the bid from the price, we find the difference between the ask and the bid price. We will get to know the spread, and when we multiply it by the trading volume, which is the lot size we are using, then we are going to get the transaction cost or the spread. Now, when we talk of cross currency, we are saying that when we take two currencies, for example, we have two currency pairs here, the euro dollar and the pound dollar. Now, when we cross them, you can see that the US dollar is common to both euro dollar and pound dollar. And for that matter, we can actually cross out US dollar and then we get euro GBP. And this becomes euro GBP becomes what we call a cross currency. So we can do the same for other pairs, okay? So that is it. And when we have a cross currency pair, we are saying that cross currency pairs are going to carry a higher transaction cost. So mostly if you are trading a cross currency, like let's say you can have GBP JPY. You see, you're going to have a higher spread and then you pay a lot transaction cost. And then another lingo we want to talk about is the margin. Last time that we met, we talked about the fact that forex brokers will always ask you to put down a small amount of money, but with that small amount of money, you can control a huge capital, and then you can leverage on that to make money. So when we talk of margin, initial margin requirement for the new trade. So, for example, when you are going to work with any broker, then they will give you what we call a leverage. And with your leverage, you're going to know the amount you're going to put down to take the trade. So let's look at leverage as well. So leverage is actually like we call a borrowed amount. So like you do not have, let's say, 200,000 to deposit in your account to trade, and so your broker will say, okay, you don't have 200,000 or you don't have $100,000 to trade, but I will give you a borrowed amount. How? Okay, I'll give you, let's say, 100 to 1 leverage. When we say 100 to 1, it means with 1% capital, you can manage 100 assets. So, for example, if with 100,000, you can manage 100,000 with just 1% deposit. So it means if you put down $1,000, you can manage 100,000. It's that simple. So that's all about leverage. And leverage will help you use small amount of money to make huge income. Imagine you deposited just $1,000, but with that $1,000, you can manage $100,000. So you can see leverage can help you make a lot of money. And leverage, the most important aspect of leverage is that it will help you open a lot of trades. Okay, and then you can control that large amount of money. So that is that for Forex lingo. I believe that after here, if you are penning down your questions, and after I'm done, you can ask your question. Let's go to types of Forex orders. When you are going to take a trade, you see, you are given different types of orders that you can actually trade with. So it's based on your analysis. So when we talk of an order, we are saying that an order is an offer sent using your broker's trading platform to open or close a transaction if the institutions specified by you are satisfied. Sorry, the institutions specified by you are satisfied. So it is all about, when we talk of orders, it's all about how you're going to enter the trade and how you're going to exit the trade. That's all about the orders. So when we talk of forex orders, when we are just talking about how are you going to enter and how are you going to exit your trade. Entering a trade is opening a trade, and exiting a trade is closing a trade. I think in our previous lesson we discussed squaring up, flat, and something like that. So I believe you can go and revise that, and you'll get more understanding. So let's look at other types. Now we have what we call market order. When we talk about market order, we are saying that an order instantly executed against the price that your broker has provided. So when you go to the market and you think, I think the price is in my favor and I think my analysis is correct. I want to buy the trade. The market will go up. I want to enter the trade right now. Then you go with a market order. Then it means the moment you click, let's say buy or sell, instantly the trade is executed. And your broker will have to play the trade for you. But when we talk of pending order, we are saying that an order to be executed at a later time at the price you specify. For example, you think that the price is in your favor, yet where the price is too expensive for you to enter the trade. And so you think that, maybe some few minutes later, some few hours later, some few days later, or some few weeks later, the market will reverse to this particular price. And I think that this price will be the best place to enter the trade. And then instead of you waiting for the price to come there, and sometimes the price may come there and you may be absent from the market. In that case, we put on a pending order so that whether we are present or we are absent, the market will come to we actually predicted, and peradventure the market hits the price that we predicted. There you see the broker will execute your price or your trade for you. And so that is the difference between a market order and then a pending order. Right. So that is it. And so when you go to the market, the platform where you're going to trade, the broker will give you these two different trading options. So are you going to take a trade with market orders, then immediately you buy or sell? Or are you going to go for pending orders? Okay, buy limit, sell limit, buy stop, sell stop. These are orders that you can use to take trades later, whether you are present or you are not there. And so you set your orders over there, and then you leave the market to do whatever it was. So for example, I showed you this. Let me show you this. On this particular account, pair, that is, I told you my favorite pair is GBP USD. When you look at my setup, you see, for me, I think that the market is making some high and low, another high, another low, and I am expecting that price is going to make another low, another high, okay? And then I will expect the market to sell to this place. And even though the market is not there, currently look at where the price is. That's where the black line is. And so, but look at where I want to make an entry. This is where I want to enter the market. And so, this one, if I want to use market execution, the price, the trade will execute at where the black line is, which is not the place I want to trade. So it means that I have to put down, or I have to use pending order. That means I will place a sell limit. Okay, when we talk of a sell limit, it means price will go up and hit that entry point, and then the market will begin to sell. Now, when we talk of a sell stop is that when the price is going down like this, okay, let me use the arrow. When price is going down like this, and then I'll put my trade over here, so that when price comes down here, it will trigger and then it continues. That's the sell stop. But the sell limit is when price will go up. I want it to go at my entry point, and then it sells back. The same thing applies to buy stop. When we talk of buy stop, the market will be going up, and then I'll place a trade upwards. So when the market goes up to that point, and then it triggers and then it continues. But for buy limit, I'll place a buy limit, let's say here, and when the market drops to this point, and then it buys from this low, and then it goes up. Because remember, I've told you in trading, we buy low and sell high. So that's what we do in trading. And so this is how we manage, or we take trades. So whether you're going with market orders or pending order, that's what we do. Okay, so that is market order for you. So for market order, we can simply say that a market order is an order to buy or sell at the best available price. So the moment you go to the market and you think the price is okay for you, just click buy or sell according to your analysis, and the trade is executed. And so we are saying that it is just a one-click ordering. So the moment you click, the trade is executed, and that's all. And the trade is just executed instantly. That is for market order. But when you talk of the limit orders, we have the buy limit. So we are saying that you place a buy limit order to buy at or below a specified price. That is what I showed you here. Look at where but I'll place a buy limit here so that when the price drops to this level, I'll buy. So it means I'll buy at this level. So for that point, I'll place, let's say, a trade here. And so I am expecting the price to buy to this, let's say, this level. And so I'll place a trade at this level. Okay, very simple and easy. Right. And for buy stop, that is not the same as for buy limit. For buy stop, a sell limit to, like I showed you, we place the trade higher, and then we expect the price to go there, and then it drops. So that is buy limit. So buy limit, the trade is below the entry point or the current price, and then it will drop to that point, and then it buys and moves up. For sell limit, we also place the trade above the market current price, and then the market up to that point, and then it sells. So that is it. So you see, the current price is the blue dot. So this is the current price, and so buy limit is below the current price, and the market will drop to the buy limit, and then it goes up. For sell limit, the blue point here, the blue one here, is the market price or the current price, and the market will go up and hit the order, and then it drops. So that is buy limit and sell limit. The same way, we also have stop entry order or stop exit order or whatever. So we have the buy stop. For buy stop, you see the entry point or the market price, or currently the price is below, and then we place a trade above the current price. So it means when the market moves up, it triggers the trade, and then it continues. The same way, for sell stop, we place the trade below the current price, and as the price moves downwards, it triggers the trade, and then it continues in that direction. So you get to know the difference between buy limit, sell limit, buy stop, and sell stop. So buy limit, don't forget, it is buying low, placing an order below the price, and then the price will come down to trigger it, and then it goes up. By buy stop, we place the trade above the current price, and the price will go there to trigger and continue. The sell limit is also, we place it above the price, market will go up and trigger it and come down. But for sell stop, we place the trade below the price, the market will go down and trigger it, and then it continues. So that is that for the market orders. Very, very simple. Okay. Then we also have the stop loss order. Anytime you are taking a trade, stop loss is inevitable, because you see, any trade you take, you are trading with probabilities. And so if you can see what I have here, the ash box here is my stop loss. And so the last point here is my stop loss order. What I mean is that if, let's say, the trade, can I get a pencil to do so? Okay, let me use this. I think I'll have let me use this one. Okay, let me use the highlighter. So this is where my stop loss order is. So what I'm saying is that, let's say if the price, currently we all know the price is here. This is where the price is, okay? And so if the price moves up to this point and it triggers my trade here, instead of it coming down for me to get a profit, no, you realize that, look here, the price will now go up and then it will trigger my stop loss. When we talk of stop loss, it means you have lost the trade. So the moment it hits your stop loss, it means you didn't make profit. You have lost the trade, and so you have lost some money from your margin. And so what I'm saying is that why we set stop loss order is that we do not want the trade to go and go and go. You see, if you don't set your stop loss order, your trade will be against you as far as it can go. So by the time you come to the market and see that your trade is against you, you see that you are in a serious loss. But when you set up a trade, you set up your stop loss, meaning that this is where the market is invalidated. We will talk about a point invalidated. It's also another jargon. So when a price comes here and the setup is invalidated, then I'm out of the trade. The market, there's going to be an execution from the broker. The broker will just take me off the trade without my presence or whatever. So I did not have to click anything, but because I've told the broker that when a price gets to this point, take me off. So we have a buy stop loss order, and then we have a sell stop loss order. So particularly, let's look at this example. This one is a sell stop order. So this one is a sell stop loss order. So because I want to sell the trade. So if the price comes here and then it doesn't, it goes up, then if it's against me, then the stop loss order will take place, and so I will lose that trade. But let's say I'll enter a trade like this. Let's say I'm here. I think the market will hit this point and then go up. And so I will set my stop loss, buy stop loss order here. So it means if the market comes here and triggers me, but instead of it going up to give me profit, it continues down, then I will hit buy stop loss order. And then I'm off the trade, means I've lost money. All right. So this is actually some of the orders that we have in trading. So what are going to trade? It depends on the kind of trading you're. Are you going to take market execution, or you're going to use pending orders to manage your trades? And as we move on to all those things, especially when we start taking trades, okay? So you have nothing to worry about. So all you have to do is to remember the orders, okay? All right. Then we also have what we call trailing stop. Now, when we talk of a trailing stop, we are saying that a stop loss order which is always attached to an open position and which automatically moves once profit becomes equal to or higher than a level you specify. Now, let's go back to the market. Let me clear all these things. When we talk of trailing stop, very, very interesting. You know, sometimes I have to trail your stop so that you can actually prevent yourself from losing a lot of money. Let's say, for example, the market is here right now. It moves up, then triggers my trade. It begins to move down, and then down, down, down. But you see, the moment it gets to this point, instead of it continuing to hit my target to give me the full profit, it will not do that. So what do I do as a trader? So what I will do is that, remember, I have set a fixed stop loss order here. Meaning, if the trade triggers here and moves back, it will hit me at this point. But now look at this. I have entered a trade here. Let me use this one, the highlighter, the brush. I entered a trade here. And now the trade has actually moved from this point up to this point. Do you know how much money I've made so far? And instead of you trailing your stop, moving your stop loss a little so that you actually tighten your loss, you still keep it at where it is. Sometimes the market is so rough. Now let me teach you this thing. Look here. You enter a trade here. Look at this one. You enter a trade thinking the market will go up, you see, and then it goes up. Are you not in profit? You are in profit. But you see, it came back here. It goes up like this. But you see what happens? Boom! It is down here. It's almost at your entry point. Are you going to trade like this? You will not make a penny in the market. You will not make anything. And so when it moves like this, you trail your stop, so that at least, should it go against you, you not lose money, or sometimes you leave with a small amount of profit. That's fine than for you to lose your money. Let me give you another example. You entered the trade here. Look at this. The market moves here. It came back here. And then it goes up again. You didn't trade your stop. What I mean trading your stop means moving your stop loss closer to your entry point and sometimes be above your entry point, so that if the market goes against you, make profit. You didn't trade your stop. And then you see the market came down here. You are still in the trade. It moved back here. And boom. You see? The market is now below your entry point. Look at your entry point here. Mm-hmm. Do you want to trade this way? You will not make a penny in the market. You see, the market is now below your entry point. And you are now in a loss. But if you had trailed your stop, moving, let's say, your stop loss from this point to, let's say, stop loss from here, and later you move to here, and let's say later it's here. Even if it came here, you lose something, but it's quite fine. Okay? You will not lose much, but maybe you make a small amount of money. Or because of the break even, you can break even and then that's okay. But because it didn't trail or stop, now the market is against you. So this is also something you need to take note of. Don't worry about this too much. You see, I'm not trying to scare you, but I'm trying to give you what happens in the market. So when we start trading live, we will get to know all the ins and outs of trading. Okay, very simple. Now let's go to limit orders versus stop orders. I think we have said so much about this. So let's move on. All right. So we also have what we call weird forex orders. We have time in for the TIF orders. Now we are saying that depending on your trading platform, you may see what is known as time in force. And these are special instructions that tell a broker or trading platform how long an order should remain active before it is cancelled if not executed. So sometimes you take a limit order, but you see it is timed. And so if it is not executed within the time, the trade is cancelled. That is what it means by the time, the TI, the time in force order. So it means your time is actually, your trade is actually timed, okay? And then you have good for the day, the GFD. And you are saying that this is the default time for the a time in force for most trading platforms. The order remains active until the end of the current trading day. If not filled by then, it is automatically cancelled. So let's say you open a trade in the morning, and then you are expected to enter the trade before the close of the day, but by the end of the day, your limit order was not traded. The broker will cancel the trade. So that is it. And then we also have good till cancel. It's also another trading order. So when you take the trade, we are saying that the order remains active until it is either filled or manually cancelled. So you set up and then you put down your limit order. If it is not triggered, it will still remain active until it is triggered, or you think, Charlie, this one will not go anywhere, so let me close it, let me cancel it, and that is it. And then also have immediate or cancel. The IOs, the order must be filled immediately in full or in part. Any portion of the order that cannot be filled immediately is cancelled. They also have the fill or kill, the FO key. So I would encourage you that make sure you visit Baby Pips and read more on these. Okay, it will really help you. But I told you this is still the mechanical stage. So if you haven't to know all of these things, does not mean that you're going to make a lot of money. Sorry, you are now eligible to trade. No, that's not it. Okay. So we have a lot of orders over there. Time will not permit us to go through all because we have other things. And so at least this is the cheat sheet here. Okay. We have the buy stop, the sell stop, the buy limit, the sell limits. At least we have explained it. So for buy stop, price is above, and then market moves to trigger and continue. Sell stop, price is set below the current price. Price moves down, triggers it, and continues. Buy limit, price is below the current price. Price moves back down and triggers it and goes up. The sell limit, price is above the market price, and then price will go up to trigger it and move down. So that is that for the orders over here. So that is it. So now let's now move on to the trading order type cheat sheet. I think we said that. Right. We will end the lesson very soon. So let's remain active. You guys have really done well today. I believe the lesson is getting a little interesting for you. You know, Forex is very, 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 very interesting if you learn it well. So I think we have discussed so much about the orders. Okay, so let's look at this. For euro dollar, okay, you are going to trade. You have the sell and then the buy. The we call the limit. The bid and the ask price. And so when you go to the market, your broker will give you this place to take your trade. Are you going for market execution? Are you going for limit order? Are you going to use a stop or a stop limit? So which one are you going to take? And so you decide, okay, now I want to execute instantly. I want to take the trade now. Then you go with the market order. No, I want to take the trade later. I'll go for a limit order. The same way. So I think for limit orders, the price will be above or below the current price. So you go. And then also for stop order, the price is your order is always going to be above or below the current price, depending on where the market is moving. And then the stop limits, you know where you want your market to take you off from the market. So you take the trade, and then after you have set all those things, you click place order. Then you either it was a market execution, you are in a trade and you are watching it. Whether you are going in profit or you are in a loss or all that. Don't worry, we will do that. If it is a limit order or a stop limit order or whatever order, it's a pending order. You wait and then the market will execute at a time. So that's that. Now, when we talk about market orders, we say that the market order is a type of trading order that is executed immediately at the best available market price. And the main purpose of market order is to ensure quick and certain execution of a trade. And it is most suitable when a priority is when exit position promptly without being concerned about getting the best possible price. So that is it. So that is for market orders. But it's quite different from limit orders. And so let's look at an example here. So we said, suppose you want to buy 1,000 euros with US dollar. The current market price is this. The bid and ask price is there. If you place a market order to buy euro, you actually order, your order will be executed immediately at the ask price. So that is, you are buying. So 1.1052 will take place, and then you are in a trade. And we have said that this means you receive 1,000 euros and your account will be debited the equivalent amount in US dollar at the prevailing exchange rate. Right. So market order, the importance of it is guaranteed execution in most cases. Okay, and then it's very simple, and the spread we are saying that it's almost instant, allowing you to act quickly on market opportunities. And the disadvantage is no price control. You can't control the price. And then there's also a slippage risk. Sometimes you said if it's a fixed spread, you see there will be recode and slipping. And we are also saying that not suitable for all markets. Okay. So take note of that. And we have also talked about limit orders, stop orders. I think we have talked about a lot of them. So I think they are clear. Let me move on to the next. Let me check. Let's look at this one. The OCO, very one cancel order, very important point. You see, it is often used by people who do not have proper precision in the market. So they are not sure they want to take. So what they do is that they will take two trades. For example, let's look at this one. On this market, let's say I think here the market is go up or down. Oh, sorry, let me clear my sorry for the background noise. Okay, so let's say sometimes you are not sure of yourself, and so whether the trade is going to go up or down. And so what you do is that you can apply what we call the OCO. Right. So for the OCO, let's say price is maybe here. Okay. Let's say price is here. So you place a limit order here and another order below. So if the price moves down, it triggers and probably let's say it continues. Or it moves up according to whatever order you place below. And sometimes if the price also moves up, it triggers and continue, or it comes down according to the order you place. And so when one is taken, the other side is cancelled. And that is what we call the OCO, or one order, one cancel order. That is the OCO. It's a very simple concept in Forex trading. Mostly we use it in trading news, where you do not know where the market direction. But you see, if you learn very well, you definitely know where the market will go. So there's nothing to fear about the direction. Okay, so let's actually move to the next one. Let's go to demo trade your way to success. Demo trade your way to success. Now, when we talk of demo trading, we also call it paper trading. Then we are saying that it allows you to practice trading strategies and get familiar with market conditions without risking any real money. So that's simple. Demo trading is all about. So you are going to do it after we are done with the learning. I will take you through the practicals. where we are going to analyze like I am doing here. Okay, if you can see, we are going to teach you how to analyze the market and able to predict the correct direction of the market. Even though you are not a master of the market, yet you'll be able to analyze well with precision, with factors available. You see, everything is available in Forex Trading, so it's not difficult. The information that you need to take the trade, they are all available. So all you have to do is to learn. Uh, you have to learn, and so we will teach you the news. We will teach you everything. There's one strategy that I have. We call it the FIST. We teach you fundamental analysis, intermarket analysis, sentiment analysis, and then we teach you technical analysis. We put all of them together and it give you FIST, the FIST, and then you are able to blow the market in your favor. And so we will teach you. And when we teach you, before you put in real money, you see, that's what I'm saying, that people who do not go through the mechanical stage will always lose money because they were not taught how to demonstrate their way to, okay. And so we will teach you how to demonstrate your way to success, how you can, the strategy works, what is the win rate, what the probability is, how much. Let's say if you are to take 10 trades, how much can you win and how much can you lose? What is your win rate? You do all those things. By doing all those things, okay, now I am poised to go and trade for profit. That is demo trading for success. So we will go to some platforms where we will give you virtual money, and then you will take trades to check whether the strategy that you have been taught is working, and how you learn how to use the platform, especially the orders, the market order, the limit orders, and all that. So now listen, you should demonstrate until you develop a solid, profitable system before you even think about putting real money on the line. Listen very carefully. You should demonstrate until you develop a solid, profitable system before you even think about putting real money on the market line or on the line. In fact, you have to write this down. Forex traders, one of the things that we do is that most of the times we write most important information that we need, and you can just write this and then make a template of it and hang it in your room or on the wall, so that anytime you see it, it tells you. So if you think you have demonstrated profitability, and then it tells you that now you can go and put money into it and make money. Otherwise, you put money in the market and you lose it. I'm telling you, you put in $100, you lose it. You put in $1,000, you lose it. You borrow money, you lose it. You lose it and lose it and lose it for years. In fact, he said we should repeat. I want you to say it with me. Though your microphone is off, but you can say you should trade. But now say, personalize and say, I would trade, or I would demonstrate. I would demonstrate until I develop a solid, profitable system before I even think about putting real money on the market or on the line. Say it again to yourself. Personalize it. Say, I will demonstrate until I develop a solid, profitable system before I even think about putting real money on the line. If you say this to yourself, you are demonstrating success. Okay. So if you have a trading partner or a friend, always tell yourselves, okay, we shall demonstrate. The losing money in the Forex market is inevitable, but you have to lose wisely. You do not have to lose any money in the market. Just any money. Just because we say it is part of the game, so you just lose wisely. No. Which of you will enter into a real business? Like, let's say you're going to open a shop to go and sell and think that, oh, and I lose all the money that I invested into the shop. That's fine. Who will do that? No. It is possible for you to lose some, but you have to lose with wisdom. Let me tell you something. Let's go to this market. For example, when I've set this trade, if the market goes here, I will enter the trade. Why? I have a reason why I enter the trade and come down here. But if I lose this trade, it is fine and correct because it's another information for me that the direction of the market that I'm trading or the direction that I predicted has shifted to another place, so I should take a different position. You understand? And so even though losing money in forex trading is inevitable, you are not supposed to come to the market and lose and lose and lose because it's like you are happy losing money. Some people will tell you, my stop loss is more than your salary. So what? If your stop loss is more than my salary, so what? Did you enjoy your stop loss, or was your stop loss credited to your bank account? It was taken out of you, so you lost it. So if you lose money, and why? Why should I be happy that you have lost money? Some people losing money is like they are taking jollof rice or something. Please, sorry, let me take some water. Okay. Mm-hmm. Sorry for the background noise. Okay. So listen to what the guy is saying here. Now, place your hand on your heart and say, I will demonstrate until I develop a solid, profitable system before I trade with real money. It's almost like your forex trading pledge. Your forex trading pledge. Now touch your head with your index finger and say, I am a smart and patient forex trader. You must say that. Okay? Again, do not open live trading account until you are consistently trading profitably on a demo account. When we give you a demo account, you can't even make $1 on it, and you are saying we should give you money to trade. What are you trying to say? You know, before somebody will give you money to trade, the person will want to know how much have you made. Okay, you have not made anything in trading. You do not even trade a demo account, but you want to trade real money. What is the guarantee that you are going to make money? It's very unreal. You're just going to bend the money for the guy, or you are going to bend your own money. So please listen to this advice. Very, very important. Very, very important. So that is trading for you. Get to know the ins and outs. And for the meantime, take note of this information. Concentrate on one major currency pair. So I'm going to give you an assignment. In our previous lesson, I gave you the stock market, the forex market, the crypto market, indices, commodities, and all that. But for now, I'm going to teach you forex trading. When you are well versed into it, you can diversify your portfolio and trade other assets. But for now, you're going to concentrate on the forex. So for your assignment, you are going to research into the pairs. Are you going to trade a major currency pair, or you are going to trade a minor pair, or you are going to trade cross currency pairs? You're going to research and find one pair interest. I'll give you the information you need for your research, and then you find one pair, and that pair alone is what you're going to study, and I'll teach you how you study that. So that will be your assignment. Wait for it. All right. So we have said that demo trading is a valuable tool. It's important to remember that it doesn't perfectly replicate the emotional and psychological pressures of live trading. You can make profit in currency trading, but as with all other aspects of life, it will take hard work, dedication, a little luck, and a whole lot of patience and good judgment. So don't forget. All right. Now let's go to the most interesting part of why we all want to be forex traders. We are almost through for today. Can you get rich by trading forex? The answer is very obvious. The forex market is easily accessible to individuals with relatively small amount of capital. And due to leverage and the volatility of the market, forex trading can offer the potential for high returns. Yes, you can do that. So you see, the answer is very obvious. I don't think I should read all, okay? Or you want me to read all? Because it's very clear, you can make a lot of money. Now let's look at some of the things you must consider before starting trading currencies. All forex traders, and we do mean all traders, lose money on some trades. So it is inevitable. But it is sad to tell you that 90% of traders lose money. It means that a lot of people do not have the right information to trade. And so you see, that's why I'm telling you that don't skip any of the stages I'm training you on. From mechanical stage, learning, to subjective stage, applying, before you get to the intuitive stage, where you can trade without any serious effort. Okay? You can trade so easily when you get to the intuitive stage. But if you skip the stages, you work hard and it will take you years. Trading for us is not for the unemployed, those on low incomes who are knee deep in credit card debts, or who can't afford to pay their electricity bill or afford to eat. Because if you are struggling with any of these things, you will not trade with a clear conscience. And for that matter, you lose a lot of money. Okay? Again, because why are we saying that? Because the problem is that many traders come with the misguided hope of making a gazillion bucks, but in reality, they lack what? The discipline required for really learning the art of trading. You see, because people want to make money, that's what I'm telling you. They lack the the discipline, which is required for really learning the art of trading. Trading is an art. It's a science. We have methods of trading, and with the methods, it becomes an art. So if you how can you trade as an art? You will learn the hard way. So we have said that most people usually lack the discipline to stick to a diet or to the gym 3 times a week. So the same way, they bring the same thing to the forex market. And listen, forex trading is not a get rich quick scheme. You can be trading for 4 years, 5 years, 6 years, 7 years, and you're not making any money. The last time, I think I put a link on the platform for you to watch. Kojo Forest, who is one of Ghana's top traders, he said it took him 7 years to get where he is now. But listen to the most interesting part of the journey. After 7 years, when he started making money, from 2020, he started learning trading from 2012. He said when he was in first year in the university. And in 2019, it was 7 years, yet he had not made any serious thing in trading. But 2020, he started cashing out seriously. And by 2020, 2023, he had a house in East Legon. He owns a house in Dubai. He had Range Rover and a lot of cars. And today, as we speak, he has a Cybertruck and different cars. And even he's now into real estate within 4 years. Okay? So it's not a quick, a get rich quick scheme. But when you follow the process, I'm telling you, within a year, the amount of money that you make, it will be more than the amount of money somebody will make in his whole lifetime. So understand it, and then make sure you dedicate yourself. Because why are we saying that? Trading is very difficult because of the high risk, because of the leverage, the competition, psychological factors. You understand? So trading is not so simple. So forex trading is a skill that takes time to learn. Please write this down. I mean, make a template of it and post it on your wall so that every day you see it. Forex trading is a skill that takes time to learn. And I've told you several times, it starts from learning towards subjective stage, applying, and from applying to intuitive stage, playing. So if you skip the stages, remember you are rather prolonging your way to success. Right. So that is it. And we have said that it takes a lot and lots of practice and experience to master. There is no substitute for hard work, deliberate practice, and diligence. While getting rich through forex trading is possible, it's important to approach it with caution, realism, and a long-term perspective. So you see the point we want to say. You can make money, riches. Go online and search for Jeffrey Benson, Happy Forex. Go and check Justice Bedi, Elvis, and the Forest. These guys have made a lot. Go and check Tapilo, the guys in South Africa. Go and check on Forex Nasdaq Billionaire on Instagram. They have made a lot of money. Happy Forex is not up to 30 years, but now he has Range Rover, he has Rolls Royce, he has a lot of mansions in Nigeria. He is worth over $20 million. Go and check on Dapper Willis. Dapper Willis is also a young guy, about 30, 31 years, but he's a damn rich guy. He's also a Nigerian. He's worth about $300 million. And he managed funds for some of the sheikhs in Dubai. And he's managing not less than $650 million. This is huge. You can get there, but remember, it begins with learning. So we are saying that practice demo trading account until you find a method that you know the inside and the outside of it, and you can come. And so that is it. And you can comfortably execute objectively. Basically, find a way that works for you. Okay, right. Let's go to the last part of our lesson, and then we are done for today. That is Forex trading sections. Forex trading sections. Now we are saying that we are now ready to unlock the secret of Forex market hidden rhythm. Now that you know what Forex is, why you should trade it, and who makes up the Forex market, it's about time you learn when you can trade. So very simple and easy. Now it's time to learn about the different Forex trading sections. In Forex, we have 4 known trading sessions. We have the Sydney session, that is Australian session, the Tokyo session, that is Japan. We have the London session, and we have the European session, and then the New York session. Good. And they've added another one, we call it the Pig Book. The Pig Book. So we are going to look at the time frames. Okay. We have already said that it is true that the forex market is open 24 hours a day, but that doesn't mean it is always active the entire day. No, there are some trading hours which are not good for you to trade, and some trading hours are good for you to trade. Good. So let's go through them and see. Now let's look at the Tokyo session. The Tokyo session. We are saying that forex market hours. So this lesson, the purpose is to help you determine when the best time of the day are you to trade. Now, we are saying that before looking at the best time to trade, we must look also at the 24-hour day in the forex world and how they look like. Okay, we have already discussed the Sydney session, and I said earlier that we have 4 major trading sessions: the Sydney session, the Tokyo, the London, and then the New York session. And New York session is the most favorite in all of the trading sessions, because don't forget, we said that the US dollar is the most traded currency pair, and so the New York session is actually for the US dollar. So those who are going to trade pairs that are paired with the US dollar, remember, you need to focus much on the New York session. Right. We are saying that historically, the forex market has three peak trading sessions, and that is the European, the Asian, and the North American session. Okay, good. And each of them has their own times. Okay, so we have the international date line, the ideal. We are saying that it's an imaginary line that runs from the North Pole to the South Pole and demarcates the change of one calendar day to the next. So remember, as we already know, for example, that's why we have the Greenwich Mean Time, that's the GMT. We have the UTC and all that, the Eastern whatever time and all that. So I hope this one is very obvious and you know them. So now, in forex trading, this is the trading times in GMT. So when we talk of the Sydney session, in GMT, it opens around 7 a.m. to 4 p.m. That is in the local time of Australia. Okay? And then but when it comes to the Eastern time, it is 4 p.m. to 1 a.m. But those of us who are going to trade the New York session, the Sydney session begins, the UTC is for the United States side, okay? That is 9 p.m. to 6 a.m. in the morning. The 9 p.m. to 6 a.m. in the US time. And then the Tokyo session, our focus is on the UTC, which is the US time. So when you go to the market, okay, let me show you this. When you come here, this is my UTC time. And for you, when you click on it like this, because I am in Ghana and my time is GMT, and we do not have the GMT on the market. The GMT on the market is the London session. Okay, but because I am focusing much on the New York session because of the US dollar, then I will rather change my time from the GMT to the UTC. And the UTC will tell me that my time, I will have to subtract 4 hours from it. And so if my time is 1 o'clock here in Ghana, but okay, let's say it's 6 o'clock here in Ghana, but in the US, we will subtract 4 from 6 o'clock, and so it means it is 2 p.m. in the US. And so when I go to the market and I'm analyzing the market, I am not analyzing it as it is. Let's say it is 6 o'clock, so I'm analyzing at 6 o'clock. No, I should take it at the back of my mind that I'm analyzing a 2 p.m. time on the market. I believe it is clear with you. So get to know how to use the time frames. Yes. So, and then we also have the London session. So the London session is the one that is actually equal with our own. So the London session, when it is open, it is the same thing as ours. Okay. And then the New York session, it often open around 1 p.m. and then the 1 to 10 p.m. Why? Because that 1 p.m. is our time here. It's our time here. And so when it is 1 p.m. in Ghana, then we subtract 4 hours from it, and you get the American time to analyze the market. Right. So that is it. So get to know the times, okay? When you go to Baby Page, they will give you the trading times, okay? The calendar. Now, so aside the time that we have talked about, if you study it carefully, you realize that the trading session overlaps. Some of the trading sessions overlap. So the overlapping can also create what we call liquidity. And for that matter, the market will have a lot of trade volume where you can also make profit from. So you also have to take note of the overlapping times. I think, let me go and show you the Sydney, the time over there, and now that will help you. But before that, let's look at this one. The average peak movement. You see, based on the trading sessions, you can see the peak move, and the peak move will tell you the currency pair you should trade based on the session. For example, the Tokyo session, the currency, let's say the currency euro dollar can have a movement about 76 pips, a maximum. And then in the London session, the euro dollar, because the euro dollar, the base currency is in Europe, you can have the highest trading session and that is the London session. So it means if you want to trade the euro dollar, it is best to trade it in the London session. I believe you're following. The same way, the British pound dollar, this pair, the pound dollar, the pound is actually the base currency, and for that matter, it will have a higher trading volume in the London session than the New York and the Tokyo. Now, when we also come to the US dollar, and then the pound, the yen, it will also do well in the London session. Good. Same way, we talk of the Aussie dollar. It also do well in the London session, and it also does well, in the New York session too. The same way. So if you follow through this particular chart, you can see that the London session and the New York session are actually the best. But in all, you will see that the London session normally provides the most movement. You see, in the London session, the market moves the best. So most traders trade in the London session and the New York session, but not in the Tokyo session. So to know that. So if you can look at the chart here, you can see that the euro dollar, you see the red is for the orange is for the red is for London, the orange is for New York, and then the blue is for Tokyo. And you can see that GBP JPY, it does well in the London session. Okay. Euro dollar. Sorry, my screen is misbehaving. So look at the chart. The euro dollar does better in the London session. The pound dollar does better in the London session and the New York session. The USD JPY, also the London and the New York. The Aussie dollar to London, New York. The New Zealand and the US dollar, London, New York. USD CAD, London, New York. Okay. And then USD and the Swiss francs, London, New York. But you see, if you follow through, you can see the pairs. You see, I asked you that go and search on the pairs which have the highest trading volume, and then you choose which one you're going to trade. If you look at the chart very well, you can see that the charts with highest bars are the ones that are often traded. So you can see the euro dollar is often traded, the pound dollar is often traded, the euro JPY is often traded, the GBP JPY is the most traded, and then you can also see the euro Swiss francs, and then you can see the Aussie JPY, and at least you can have the dollar card. It's also good, and you also have the US dollar and the Swiss francs. It's also good. But you see, the euro GBP, this cross currency, is not performing better because it is also traded in the Tokyo session, which is actually not good. The same way, when you have NZD USD, it's not the best. But we are not saying that the ones that are not good, are highly performing, you cannot trade them. But why is it that we have pairs that perform from 100 to 150 pips per day, and yet you say, I will not trade those pairs, but I will go for the pairs that are trading around 50 pips a day? Then it means you don't want to make money. So you go for the pairs that are actually doing better in the day. Okay. So at least go and study this pair and make sure you choose which one will do better in the day, and then you study it to make money. Right. Let's move on. We are almost done. So when we go to the Forex market, we have the volatility per hour. You can see that the London and the New York session are the best. So you have to know when to trade them. Okay. Let me check if I can get the calendar for you. Let me go to the menus over here. Let me check the calendar. Yes. Let me go to the tools. Okay. You see the currency correlation calculator. Okay. We have that one here. We will talk about that one later. We also have the forex market hours. Let's take that one because that's what we are talking about. Now, when we talk of the forex market hours, we have from 1 hour. We have 24 hours here. We have the UTC and the GMT. The UTC and the GMT, we are actually going to use that one. Now, we have the Sydney, the Tokyo, the London, and the New York. You can see where the market overlaps. For example, the Sydney session, the Australian session, it begins, around 1 a.m. in the midnight, okay, to in the morning, 5 a.m., and the market is off. And because it started around 8 p.m. in the evening, and then it continued to 5 a.m. And so it overlaps with the Tokyo session, which also starts around 12 o'clock to around 9 a.m. in the morning. And you see the Tokyo session overlaps when it is 7 a.m. to 9 a.m. in the morning. The Tokyo session overlaps with the London session. And so listen, let me go and show you something on the chart. Let me go and show you something here. We are ending the session right now. So let me show you some practical. Please, sorry for the background noise, okay? If you live in a compound house, you see this is in a bit up. Okay, before it loads, let's go back. After it is done, we'll go. So you can check the overlapping. Now, you see, the overlapping here can create liquidity because many traders are focusing on when the Asian session will end and then the London session will begin. So that part creates liquidity. And so you can profit from that margin over there. And then when we talk of the London session, we are saying that it begins from 7 a.m. and by 4 p.m. the market is off. And the New York session also begins from 1 p.m. and by 9 p.m. in the evening GMT, the market is off. So as we speak now, you see, it is 6:14 today, and you see, but today the market is closed because we don't trade on the weekends. But when it is 9 o'clock, the market will open. But now it is not going to open with New York session. It will open with the Sydney session. And by 12 a.m. midnight, it will continue with the Tokyo session. And tomorrow morning, 7 a.m., we will be in the London session. And when it is 12 p.m., then you see that the London session is going on, but New York session will open. And there is a higher volatility trading between 12 to 4 p.m. every day, from Monday to Friday. There's a higher volatility in this area when you trade in this area. I believe my points are clear, and I think we can end it here. So that is that for the market sessions. Okay, next week when we meet, we will delve deeper into the sessions, the trading sessions, especially the Tokyo, and then we look at the volatility and all that. So that is that for today. So for today, we will end it here with our discussion. And in case you have any question, you can bring it up and we'll call it a day. I said go and study this chart. Go and also study the trading sessions and get to understand it very well. So I'll end it here. And before we call it a day, if you have a question or any contribution, you can talk. Thank you. My senior man too is around. Frank, welcome. So those of you who doesn't know Frank, Frank is my trading partner. We started the journey together. We have been learning together. We are analyzing everything together. Everything we do it together. Okay. So Frank is my friend, and just like Mr. Collins, as you as already introduced him to. So sometimes to Frank can also teach you. Mr. Collins can also teach you. So get to know them. If you have any question, please you can ask. While we wait, Frank and Mr. Collins, you're welcome. You can talk. Mr. Collins, you can talk.
Okay. Uh,
Can you hear
I
me?
hope. Yeah, I can hear
Yeah,
you.
your voice is good.
All right. Then I'll let Mr. Colin finish. Then I come in.
All right.
All right. Today we had a friend who joined from Canada. That is a queer. The one you
Yeah,
mentioned,
yeah,
the
yeah,
name
yeah.
you mentioned
Okay,
earlier.
sure, sure.
Yeah.
Okay, okay,
Queer,
welcome.
are you still on the program?
Yeah, she's here. I can see her.
Yeah. I just want to hear from them whether they have followed to
Okay,
the.
okay. Azenso is also back. Suzy is back. I think some couldn't stay to the end. Maybe it could be network or any other factors. But
Evelyn, are you
so,
on
friends,
this?
I don't think Evelyn is around. I don't see any Evelyn here.
Mame Queer, Mame Kunadu.
Ah, oh, Mami K is on top here.
Yeah, I can see them, but I don't know whether they are all listening. And one other thing is, though we know we meet only on Sundays, but it seems uh, the time for the training, especially with this, where it seems to be like more technical or more practical. Some of them left before this time, like about 3 people. When we started, we were about 12 people to 15. Because I
Yeah.
had some other 2 people who joined, they all left. So maybe with this is my suggestion, like maybe we can limit ourselves to a particular time within 2 hours or something next time.
Okay. All right.
Okay. Good evening to all of us, and I hope we are all
Good evening,
doing
bro.
very
You're
good.
Yeah.
welcome.
One thing I've noticed is that as human as we are, we always want to take shortcuts to things. We don't want to pay the price of learning through learning the right things, so that when we get to the top there, these things will be our guide. We always want to take shortcuts. So whenever there is a class like this that is teaching you step by step in whatever you do, people begin to see it as, come on, I don't need this. I thought we were going to learn something extravagant. I thought we are going to learn strategy. We are going to be seeing the screen. We are going to be seeing the chart and the candlesticks and all those things. I think that is what you are going to be teaching, but look at what you are teaching. So when they come, they lose interest and they go. But I want to tell those of you that are remaining here that if you go onto the night and then you listen to every professional trader very, very carefully, you know that they all did these baby pips. Just mention the ones that you know. These Nigeria guys, they did these baby pips. Jeffrey Benson and then Habi did these baby pips. What is his name? The billionaire trader, Dapo did this. And Kwejo Forest also did this. You know, all these great people we are seeing today, we are aspiring to be like. They all went through these steps. You can live and then jump ahead of time, but you will not be able to understand certain things. This baby preps is going to teach you all the language, everything you need to know before you go to the screen. So do not be dismayed if you come to these kind of things and then they are teaching you these kind of things. Please take it to heart and make sure that you learn. Make sure you follow every step along the way, bit by bit, and learn. Otherwise, it will work against you tomorrow. If you run away from this fight, you are only living to fight it another day. So these are the steps, and I am very, very proud and happy that it is my friend, it is my brother, it is my counterpart that is teaching you these things. If I also call a class, this is the same steps I'm going to take you through. So I am asking everybody to do it. I know it's difficult. It's very, very difficult, but you are privileged. When we started out, we had nobody to teach us anything. We had nobody to hold us this way. We had nobody to tell us anything about these things. We had to motivate ourselves and learn, because we saw how we were losing money and we didn't like it. So we learned the hard way. But you are privileged. Please take it to heart. Make sure that you see, in this class, one thing that this class is going to do for you is this. It's going to help you. I was even thinking that I don't know how far you people have come anyway, but those of us over here, let's put it as a challenge to ourselves. The next time we meet again, let us all post our our scores on the board to motivate somebody. Let the person know, oh, okay, I have been able to do this. I have been able to do this test. I am moving ahead of you. No, this person is going too far. I need to catch up. That is the motivation that is going to help us get to the top. So please, let us all take these things to heart. Do not be dismayed. Do not be afraid that, oh, come on, this thing is going to take long. Yes, let it take long, because the longer it takes, it's going to build you and it's going to make you very stronger. So I think for now, the time is fast spent. I just want to leave it right here, and so that we can go. Thank you very much, and greetings to all of you.
Welcome, bro. God bless you. Thank you for the encouragement, and I believe that it will help our friends here. The journey is very tough, but as you all know, I always take my encouragement from the Word of God, because Jesus said, which man of you would want to build a house, would not sit down first and count the cost? Which king would go for a war, would not sit down first to check the opponent? How many soldiers or weapons is he coming with, and then prepare accordingly? You understand? So if you think that it is very tedious, it's difficult, this thing is quite mind-boggling, I'm telling you, you live here, no problem. It wouldn't pain me, it wouldn't do me anything, because actually it's from my heart to you, okay? But if you really want to do this thing, you will go and do it the hard way, just like my brother said. In fact, we did it the hard way, because and the amount of money we have lost in this market, you can't mention it. Because I think we didn't have any mentor. And the point is, you can't even pay for the mentor. Today I was just surfing the internet and I hopped onto one platform, one website. I want to diversify my portfolio. So I was reading a particular book, and the book recommended a website. So I checked the website, and the guy for mentorship, he's charging $100,000. How can you pay it? You can't pay it. And even if you have the money, you would think that, how on earth should I pay $100,000 to take a course? What? But you know something? If you pay that amount of money, maybe a year or two or some few years to come. You see, because that person is going to give you a cooked system, and with that, you are going to make money within a few years. But if you think that you want to do it all by yourself, I think the systems are there. You can just go and try it your own way. You will still succeed, but just that it will take you a lot of time. But with mentors, you curve your way to success very shortly, at least. So that is that. Is there anyone here who want to speak? You can put up your hand, or you can just open up
Yeah,
the
Prof.
microphone and talk. Mr. Collins.
Yeah. The reason why people are charging so huge, especially with that 100,000, is to let you know
Yeah.
that what you are about to do is a serious work. Uh-huh.
Yes.
For this, like what we are doing now, some people are also doing the same thing, like charging higher, as you said. But to
Yes.
them, if you pay 100,000 for such a lesson, it means you are going to make sure you succeed.
Uh-huh.
And we should have the same mindset here. Though this class is free, going forward, like if you take correct advantage of it, it's going to help you a lot. So
Yeah.
we shouldn't put it in our mind that once this is free, like we can just like do anything and not take the class serious. But if you take it
Mhm.
serious, you have gotten something that is worth chasing for in a lifetime, but
Collins,
Sure.
in a very
Collins,
cheap way.
Collins,
Yep.
please, can I say something?
Oh, no problem. You
Looking
can
at
go ahead.
looking at the members over here, I can only see ladies. I can only see ladies. That is Equia Amo. I can see Susie, Susan. I can also see Mami Kunedu. Do you know what? When my brother told me that he was going to be organizing this class, one thing that I said to him was that it is a good thing that he's going to be doing this thing for free to people, because some time ago I was doing it for free and the number wasn't this encouraging. But for now, for me, I charge for whatever I do. I teach the same thing. I do the same classes for people online. Some people from Saudi Arabia, some people from Dubai and other parts of the world. I do class for them. But what I do is that I charge them now. I charge them something very small and then they pay for it and then the class is going on. But in Ghana here, people don't get it, just like you are saying. You decided to learn on your own and now you have become a master at the game and then you are teaching people for free. Look at the number of people over here. But when you go to the platform, we have about 129 heads in this platform. Where are they? So if not for the fact that Equiamo is here, Susan, and then I don't know who is executive anyway. If not for the fact that these four people or these people are here listening to what you have to say, then what are you doing? You are wasting your time. But thank God that they are here and they are listening. Sometimes charging is also good. That helps you to know what you are doing, to know what you are aiming at in this life. If you pay and then you sit down without learning, that is your own cup of tea. But Ghanaians don't get that in our we can't get that around our head. So it's like that. For me, I'm doing it and I'm charging people and they are paying. But my brother is doing it for free. And it's the same thing I'm doing for fees. So please take this thing very seriously, because the day he will also say that, well, the class is not encouraging, I'm not having the people that I have to get and all those things, maybe he will also say, no, I'm not going to do this anymore. And you come run into people. One thing that I know in life is that if you want to start a journey with somebody who has already walked the path that you are going on. And not just walk the path, but is just a step ahead of you. Walk with that person. That person is going to have time for you. That person is going to have you by the hands and then walk you through. And that is what my brother is doing. So please, if you are here, you are privileged. It is free. Take it. Take it. Some people may not even have heard about baby pips until today, until now, until joining this. So it is a good thing. You are learning something. Thank you very much. I wouldn't want to waste my time.
Welcome, bro. Mami Kunadu, you can talk.
Yeah, hello.
Mami, you can talk. Azazo,
Yeah, senior.
my bro.
Yeah, it's well said. In fact, I really appreciate your service, your selfless service, and the time you are taking to take us through step by step to reach our target. In fact, you've done very well. And
Thank God for that.
I promised myself that this time around, I started this course, but later I just stopped. But this time around,
Yeah,
I'm going to put much energy into it.
sure.
Yeah. So I will
God bless
encourage
you,
all my
bro.
colleagues that we also put much energy so that we can succeed in this journey.
Sure.
In
Yeah, yeah.
no time,
Well
this
done.
hello, Prof.
Yeah, Mr. Azazo. Yeah, apologies.
Yeah, I'm saying in no time, what we've started that people see like with time is going to be it wouldn't be an easy platform for anyone to enter. So once we build up, as we have all started, we should all try and put our minds to it. After these
Oh,
slides,
exactly.
mostly, yeah, I think today many of
Yeah,
us we got a concept. We got a concept
sure,
to
sure.
the trading technologies about the buy stop and those things. We shouldn't let those things scare us. Once you have an idea of it now, you can just hold on. Like
Yeah,
let's say tomorrow you open baby papes, then you read. It all starts to make sense. And when we start trading too, all these technologies will be normal. Like it will get to you. You understand it better. The trading times and all those the stop losses and the buy limits and those others.
yeah, yeah.
Everything will get to you with time. So we should just go ahead and continue reading. All
Sure.
right.
Yes.
God
So
bless you.
before
Mami, you can talk.
briefly, I want to add that thank you very much for your time and the resources you are putting together.
Welcome.
Last time I was just contemplating, just saying, if nothing at all, who is even guiding you to go ahead do all these things for us? We really appreciate it. And thank you
Sure.
so much. Some of us we are totally new to the whole thing, so even the
Exactly.
everything is new for us. So thank
Sure.
you very much and very appreciative. And we learn and hope to make it one day.
Oh, baby will not allow you to talk.
And
Mami Kunedu, Mami Kunedu, you are the kind of people we actually need.
yes,
Yeah, you are the kind of people we actually need to start teaching. There are people who have already gone ahead and who have already walked their path, but they see it to be too tough for them, and they do not want to have anything to do with trading anymore. Let me tell you the fact. Trading is a business. Trading is a business. So when you are going to school to learn medicine or to become a teacher or whatsoever, you learn first before you start making the money. So this thing that you are doing, you are saying, you said something that struck me right now. that you are new to the system. You are very new to the system, which is good. At least you have taken a step, and this step alone had already made you a millionaire before you are even learning. So please keep it up. It's going to take a while, but you are going to get there. God bless you for staying around.
Sure,
Okay.
thank you. Sure.
God bless you. God bless you so much. I think.
One thing I want all of us to do is this. During the week, please
Okay.
make sure you open. During the week, make sure you open the baby pips, read it, make sure you do your tests, take the quizzes. When you take
Yeah.
the quiz, and then you when we come back here, you show us your scores. You get it? So that we will know that there is something that is progressing. Maybe he's taking you through step by step, step by step. Yes, that is fine. That is fine. That is what he is doing for you. But when you read ahead of him, sometimes there are certain things you wouldn't understand. But when you come back and then he mentioned it, then the picture becomes so clear to you. So please let us all make sure that we read ahead of time before we come. Then we can also ask him questions that will challenge him or something like that, so that the class can become very, very lively. Thank you all.
Welcome, Bango. That is what I do. Every week, I give them the reading assignment. And I think last week, was it this week? Yeah. I think Patience joined, but I think maybe her network wasn't strong, so she left. Patience shared her scores. It was very encouraging. I think let me try and see if I can show it to you.
That's nice. That's
It was
nice.
oh yeah, it was very, very encouraging. She's new
Since
to the platform, so yeah. Let me show you this. Are you click on the okay, no. I don't think you're in the chat group. When you go to the chat group, you see what Patient posted. Patient shared her score. Let me see. Okay. What is it? Oh, she did very well. I think she scored around 91 or so. And she even shared her progress. Her progress bar. And it was very, very encouraging.
Yeah, I've seen the progress. I've seen the progress bar
Yeah.
in it, but I can't see her score. So I think that is
Oh,
fine. That is wonderful. So if we all post things
very,
over
very
here, it's going to encourage us. It is rather unfortunate that I am no longer reading baby pips. Otherwise, I would be stretching all of you over here. I will be stretching you. I'm telling you. If you see that your friend is moving ahead of you, meanwhile you started with him or her, it's going to cause you to buckle up. So it's good that we post our progresses over here. Thank you very much.
progress.
Yes, I've seen it. I saw it in the group. So
This is her progress. I think her score is also here. If you learn baby pips, in fact, to help you. So go to next week. We are going to have another progress, another reading assignment, and this is her
next
score.
week, I'm going to be posting what is it called? Some money or some trades that I'm going to be taking during the week. So please, for encouragement, so that they know what we are actually doing and how this thing can benefit them. So next week I'll be doing something shortly like that. That is if I get a chance to come on board. Thank you so much.
Sure.
This is just a way to motivate all of us. And I'm sure that we are.
Bosomiasu, scab accounts.
All right. So God bless you all for joining. Thank you. And like I always tell you, please where we post comments, react to posts, make the platform very active. Every day I post Trader Spies. Make sure you read for your encouragement. And just recently, I've posted the 3 stages to successful trading career. Digest it, make it a part of you, okay? And I believe that it will help you. It will guide your trading journey so that you realize that you are going through a process. All right. So, Mr. Collins, can you pray for us?
All right. Yeah, that was it. Also, studying Yankopon. And a day, said they were fair. Say, when Yankopon be shy. Now, I may acquaint say, ye monsieur, a quiet fashion yes can, or your sure so Yankopon, Obama and one but three. None in the radiation, so Obama and Muntias here. Na yɛtumi yi so saa nimdeɛ ɛwɔ ne kwan so na yɛtumi anya bi de aboa foforɔ asa yɛ wɔ adwuma yɛda wase yɛnim sɛ Onyankopɔn sɛdeɛ wafrɛ yɛ aba sika mu no wobɛma no ayɛ nhyira ama yɛ yɛda wase sɛ watie mpaebɔ ɛwɔ w'adom nti amen.
Amen. God bless you all.
Amen.
We shall meet next week, Sunday. But before we meet, just like Frank said, make sure you go to the reading assignments, do your exercises, and post your scores and your progress bar to encourage your friends. Thank you very much. Have a nice day and a wonderful week. Remember, GIF Trader, be not afraid.
Always believe.
Yeah. Bye-bye.
Bye.